Thank you, and a big hello from London. This will be my last broadcast of the year, so Happy New Year everyone. Last week we saw only a few interesting weekly patterns in some diverse markets. In many ways, the most interesting one was the weekly key reversal down in US dollar Korean won. This was an immediate countering weekly key reversal down after a compound weekly key reversal up in the previous week. That meant we had a weekly key reversal down last week after the prior 2 weeks had consecutive weekly key reversals up. If not a unique situation, then a very rare one. The only reason the market didn't go lower last week and ended up bounding up last Friday was due to the slowly rising mauve medium moving average, currently at 1430. This week, well, the market has for the first 2 days of this week bounced up once more from that medium moving average, and today it seems to have found some further incentive. But all we have achieved, it seems, is to move up to last Friday's close, so not that inspiring a set of actions, not just yet. The next is the minor currency pairing of the US dollar against the Macedonian dinar, which had a weekly key reversal down last week from only 2 days action. I suppose unsurprisingly, we have not seen any follow through lower this week, though prices still remain well within last week's range. On to the commodities, and we had a weekly key reversal up in Chicago soybean meal futures last week, if only just. There has not been any follow on to this pattern. Rather, we have seen a reactionary move back down that is threatening to break down through last week's low. Now, there is a lot going on in this market, from a recent head and shoulders top that has reached both primary and secondary targets below, along with a possible bearish halfway hesitation in construction, to a strong band of congestion below between 282 to 300, dating from 2020, as well as all the moving averages and a 50% Fibonacci line at 298 even, and a 61.8% Fibonacci line overhead at 311.20. Yes, there is a lot going on in there, but I would be remiss if I did not mention what I consider to be the signature pattern in this market, and that's the annual key reversal down seen here back at the end of 2023. We have been living in the shadow of that pattern ever since. The final one is NYMEX Henry Hub Natgas futures, which had a weekly key reversal up last week and saw a more than suitable follow-on higher last Monday over last week's high. However, with changeover, we have gapped lower, enough that we're now looking at a possible break below last week's low, and thus making this week a possible immediate countering weekly key reversal down. There is also a significant gap below, enticing some to try come and fill it. As always, I'm happy to answer any direct questions with anyone who's interested. And with that, I'll finish this section from London, and I hope that you found these comments useful.